Hi everyone, welcome back to the US CPA classes for business analysis and reporting examination. In this particular video of business analysis chapter, I'll be walking you through in detail about prospective analysis, and specifically we'll be covering the 5 forces analysis and the financial modeling in this particular video. So let's dive into to understand more in detail about 5 force analysis and the financial modeling topic.
Hi everyone, welcome back. So before we went over a break, so we need to start with the 5 forces analysis. So really quick, just a quick refresher so that we are on same page. So we have started with 2.2 prospective analysis including use of data. And in this, we are at very first topic, budgeting, forecasting, and projection. In the budgeting, forecasting, and projection, there are 8 topics which we need to cover. Budget analysis that we have covered, SWOT analysis that we have covered, balance scorecard that also we have covered. So now we are covering 5 force analysis, financial modeling. Then we need to cover forecasting, projection, regression analysis, and break-even analysis. So in next 1 hour, we'll be covering 5 force analysis, financial model analysis, and the forecast and projection. Then regression and break-even we'll cover in the next class. So budgeting analysis, we covered all category of budget, benefits of the budget. We've done few questions, then we have done SWOT analysis, and then after we have done balance scorecard, and all things which is being included when you are developing a balance scorecard, that also we have covered. We did one question as well. So now we are jumping onto the 5 force analysis of Porter. So in the 5 force analysis of Porter, it reflects like these kind of analysis you need to do for your business. So very first step, you need to understand the rivalry among existing competition. So there may be possibility that the competition is like your rival also, right? I don't know like whether it's right to give an example or not, but do you hear like songs of Badshah?
सॉरी साउंड
Do
दो
you hear the songs of Badshah, rapper?
सर पहले कभी सुनते थे अब तो छोड़ दिए
So any of you by any chance? And have you heard the songs of Honey Singh?
यस सर
Right. So recently, I don't know, like whether you are on Insta or not, or maybe you are on social media or not. But now these days, like they are into the rivalry. Like,
हाँ राइट ये तो पता ही है सर
yeah, have you seen that? Like the song when like this Bache is saying like scene change कर दे and किसी का comeback ही नहीं होता.
हाँ
So,
हाँ हाँ कोई कम बैक हो नहीं पा रहा है लोगों का ऐसा कुछ बोला
so yeah, that is for Yo-Yo Honey Singh. Right.
राइट
So you may see in the market there are lot of competition who do rivalry also. But like nowadays it is seen less, but in earlier days, like when we were young, there were a lot of rivalries, especially like Surf and Nirma. They used to rival against each other. And then like when this Patanjali, they came up with this toothpaste Dant Krantri, right? So then Colgate has also come up with the toothpaste called Ved Shakti, right? Have you seen that?
यस सर
Hmm. So like Colgate always shown themselves as an advanced brand, right?
राइट
Advanced, technologically advanced brand. But this when this Dant Kranti came from the Baba Ramdev in Patanjali, they have forced to come to
आयुर्वेद एंड ऑल दैट
Ayurveda.
सारी
Right.
कंपनीज का आ गया सर हिमालय
Uh,
पेप्सोडेंट सबके आयुर्वेदिक आ गए हैं
right. So these things are like called rivalry actions, and same way like in you can say what do you call it, in Netflix, there are many series which are being kind of rivalries for each other also. So those are certain market examples which you may see where competition treat each others as a rivalry and start denting each other rather than making a healthy competition. So one example could be like when this Patanjali has established their toothpaste Dant Kranti brand. You won't believe it, they hired more than 60% of the employee of Colgate.
अच्छा
Yeah. Right. So, like poaching the, the rivalry workforce is also being like an example of competition. Same way, you need to understand the competition. So that's very important. When you are into the business, you need to understand the competition in detail. Right. So when it comes to understanding the competition, you need to understand how many number of competitors you have. Right. For example, like if I say in edtech domain, so you have LinkedIn learnings, you have you can say if I say like in professional learning, you have Edutive, Reskill, you have like Coursera, like these are like the competitor in edtech domain, which we see as a competition, right? Same way, you need to understand what are the quality of product they are providing. For example, if you see in the electronic market, the good brands are like Samsung, right? And same way, if you see like home care's product for electronic item or kitchen care product, so then you see like Godrej, Whirlpool, Samsung, LG. These are into like competition, right? But for any new person who wants to enter into such market, they first need to understand the quality of the product and services they are providing, and more importantly, like after sales services. And selling is one point, but if you really wants to make a big brand, then after sales services are being very important because one time you can sell the product maybe at a lower cost, maybe at a penetrative market strategy, or maybe by good sales team. But you will not be able to manage and maintain those continuous sale if you are not providing a good after sales services, right? So you need to understand what are the qualities that other competitors are being providing, so that or what are the areas or gaps in that competition to have, which you can fill those gaps, right? Next is the other differences, which may be on account of, you can say, change in market preferences, and you can say taste as well, because like nowadays Gen Z look the things very differently. If you remember, in earlier days, I should not say this, but yeah, that's a hard fact of the change in market scenario. Is people used to study in the classroom, right? And people used to study for like when like back in 2005-6 when I was taking like CA classes, we used to sit for 3.5 or 4 hour classes long in the auditorium, right? But now the things taste and preference has been changed. People do not have that much concentration to sit continuously for 3 and 4 hours and concentrate on the studies, right? So nowadays, if you see all the big players in the edtech domain, they have started making the fast and smart and small content, right? If you see the big edtech company who are growing in the market, the one strategically changed they have made from the long 1 hour, 1.5 hour, 2 hour lecture, they have come down to the bite-sized lecture, which is 10 minute, 12 minute, at the max 15 minute. Because nowadays the retention power of the students, or you can say concentration of the student, has been gone down very significantly, or you can say people do not have patience to stick to one particular thing for a very long time. So if you see in the YouTube also, like probably earlier you might be watching in a free time YouTube, but nowadays I'm sure most of you will be investing more time on Instagram than YouTube, isn't it?
Yes, sir. Correct.
Right. So what is the reason for that? Because you need quick and you need at a less time, more powerful, more effective, and crux of the story. Right. You're not being interested in going through long and lengthy content unless and until it is like movie or a series. Why? If you see all earlier days, the movie are of 3 hours. Some movies are even more than 3 hours. But nowadays, we all are being used to for the series, right? And the series timings are generally 40 minutes, 50 minutes, at the max 55 or 60 minutes, right?
Correct.
And that has to be more concise, more engaging, and much more, you can say, powerful, right, to hold your attention. So now holding the attention of the consumer is not that much easy that it was in the earlier days. Even though if you see the small kids, when we were small kids, if like the television were open, so we were very happy with it. But nowadays, the kids are not happy with the TV. They need mobile, they need tablet, and they also want like quickly scrolling up the respective videos. Right, so the taste and preferences are being changing of the consumer. So you need to understand the consumer behavior and how the competition is reacting to that behavior, and how you can be taking the first mover advantage to those change in the behavior and change in those pattern, right? Third thing is switching the cost. Sorry, fourth thing is switching the cost. For example, if someone is using HDFC Bank, right, and you want him to move to ICICI Bank, right? So what will be the cost of switching? Right? Have you heard the term called cost of customer acquisition?
Yes, sir.
Right? So what will be the cost of customer acquisition from the organization perspective? That we need to understand, and how we can minimize that cost of customer acquisition or cost of switching the customer from Netflix to Amazon Prime, for example, right? Or from, you can say, Facebook to Instagram, or from Instagram to Snapchat, right? So those things we need to understand. Another thing is customer loyalty. So there may be possibility, like if you see all the bank, they give a lot of loyalty points, reward points. Why this culture has came? So that the people can stick to the same bank, right? If you see nowadays, or you can say from very long time, the airlines also, they have started their miles program, right? So for example, Jet Airways, they give you jet miles. Like Air India, they give you air miles, right? The Indigo, they give you Indigo miles, right? So to so that you will retain and loyal to those respective airlines.
सर यही
Same thing.
माइल्स पॉइंट ही बेसिकली कस्टमर एक्विजिशन कॉस्ट हो गई एक तरीके से, मतलब सम
Yes,
सॉर्ट ऑफ
it's kind of making your customer loyal to you,
लॉयल,
so that
तो
they
कुछ
can
कॉस्ट तो
continue.
लगी भी है उसके लिए भी.
Yes, so that they can continue to use your services. Same way, if you go to the good hotels chain, for example, like Hyatt, IDC, and all those big hotel chain, they also have their own loyalty reward points. So if you are staying over there, they give you certain reward points, and that reward points you can redeem on any such chain, or you can say under the same umbrella. So for example, like Courtyard by Marriott. So Marriott have tie-up with like many good hotels. In addition to their own hotels, they have tie-up with like many good hotels, which is like Courtyard by Marriott, JW Marriott, or there are different brands of the Marriotts, right? So that is their Marriott's points, reward points, is being eligible and applicable to all the brands which come under the Marriott umbrella. Right? That is called the customer loyalty, how you need to build the loyalty of the customer, and how competitors are building the loyalty, and how you can build a better loyalty. Right? Same way, if you remember when this Ola came into the market, so I'm sure each one of you might have experienced those days. They have given referral, right, cashback and referral bonuses. So if
Right.
you're referring your friend, you'll get Ola points, and that can be redeemed to your next booking, right? So those all things comes under the customer loyalty point, right? And the cost of leaving the market for any reason, if you have to shut down your particular segment, you have to shut down your business, what will be the cost to you? So those all things comes under the competition, which you need to understand. Second thing is buyer power. Buyer is customer. Customer is king, right? That's what you might have heard in many places, like customer is king. Why the business need to treat customer as a king or customer as your best investor? Because at the end, if your customer is happy with you, your sales will automatically grow and your business will automatically grow. If your customer is not happy with you, then no one can save you for sure, right? So for this, you need to understand, when you are into the business, you need to understand, like nowadays, I'm sure some of you might be watching Shark Tank. Are you guys into, like, do you guys watch Shark Tank by any chance?
Yes, sir.
Yeah. So now new Shark has came this year.
Sorry, sir. Repeat.
Yeah, Shark Tank 3 season is coming. So
अच्छा.
new Shark has joined, Ritesh Agarwal.
And मैंने नहीं देखा. Who is he?
Oyo.
Oh, अच्छा.
Right. In place of this, last time they have one new Shark,
कैन
Car
जो आया
Dekho.
था, कार देखो वाला.
Yeah. In place of him, I think Ritesh Agarwal has joined this year.
Okay.
Right.
Okay.
So you guys watch Shark Tank, right?
Yes, sir.
When Shark Tank, you will see, like, there would be very common question: what is market size? I do you know what is market size for any business? What is TAM, SAM, SOM? Have you heard these terminologies?
सर मतलब उसमें थे तो सही.
Hmm.
मतलब अभी याद नहीं.
So TAM is like total addressable market,
Okay.
right? So you need to understand what is your total addressable market, who all can be your potential customers, right? What are the number of customers available in the market, and what are the number of customer your competition do have? What are the customer you can be targeting, and which category or which segment of the customer you will be targeting? For example, when you think about car, right, there are three categories segmentation. One is when you think about Maruti, it's all for, first thing comes in your mind is for economic, isn't it?
Economic purpose. Yes, yes.
Right. When we think about BMW, right, so
Premium
it comes
luxury.
to the, yeah, premium segment. But when we called about Rolls Royce, Bentley, what comes in your mind? Ultra premium,
Ultra luxury. हाँ वही ultra premium.
right? Ultra luxury or ultra premium, right? And then there is one more segment nowadays is a sports car,
Right.
right?
Lamborghini,
So you need to understand the buyer to whom you wants to deal, right? So if you see, like the Rolls Royce, they have very, very limited showrooms, right? And where they find the customers and how they find the customer.
Sir,
Have you seen any? Yeah, have you seen any ad of the Rolls Royce?
no, no. That's what I was saying. They don't need to actually find the customers. They build a name for themselves that customers themselves go looking for these brands.
Yeah, right. So their strategy is altogether different. Whereas if you see like Hyundai, Tata, Mahindra, Maruti, if you reach out to any of these brand by any chance, they will be behind your life until you buy any car. Right? Same way like home loan. If you once you just registered that you want a home loan, and you will see like so many people start calling you, and from where on the earth, right?
बल्कि इनफैक्ट सर आई वाज रीडिंग कि फरारी का तो इतना ज्यादा सीन है कि वो दे कैन सू देयर कस्टमर्स if their customer make any single modification to their car. और वो भी लंबोर्गिनी या रोल्स रॉयस में से कोई एक है, they check your credibility before giving you their car.
Rolls Royce, yeah.
वो ऐसे ही कोई जाके दे ले लेगा.
There's a history to it. There's a history to it. Before the independence, there was a king, I think from Rajasthan or somewhere.
Right. वो garbage की तरह यूज करी थी उसने, garbage vehicles की तरह.
Yes, yeah. He made like 10. He purchased 10 Rolls Royce and used it for the picking and dropping garbage.
Right.
Right. Yeah. So there's so many things in the market, right? So now coming to the buyer power. So first you need to understand number of buyer, size of order, right? For example, like you can say ticket size for which you generally sells your average product. For example, for any clothing brand, apparel brands, so ticket size may be in a range of 1,000 rupees to 5,000 rupees, right? So you might be buying t-shirt, jeans, sweatshirt or something like that, right? On the other hand, for electronic brand, right? So the ticket size may be in a range of 10,000 to 20,000 rupees, right? Or maybe for, you can say, car automobile segment, so average ticket size may be in a range of 10 lakh rupees to 20 lakh rupees. So it depends. So you need to understand what is the ticket size in which you are dealing. So what kind of customer will be comfortable with that ticket size and frequency of their purchasing and the buying power of those buyers, right? Then the difference between the competitor. If you see like airlines, if you have to purchase a ticket from Delhi to Mumbai, right? So there may be like Indigo, there may be Jet, there may be Vistara, there may be like XYZ airlines. So what all things you will be seeing, the services are more or less same, but still there is a difference in the pricing, right? And each of them do the pricing very well considering the competition in the market, right? Next is price sensitivity. So for example, like certain market, certain segment or certain consumer are very price sensitive, and certain consumer are brand sensitive, and certain consumers are loyal, right? Right. So if you see India market is very price sensitive market, right? If you reduce, for example, like same product, let's say Samsung is selling at 10,000 rupees, and let's assume LG come up with the same product and same feature at 9,500 rupees. So you can easily see the switch of consumer from Samsung to LG, right? On the other hand, if you see the consumer of Mercedes, consumer of BMW, consumer of Rolls Royce, they're not price sensitive. They are brand sensitive. They are, right? On the other hand, same way in the mobile segment, if you see the people who wants to buy Apple, they go for Apple, whatever the price would be, right? The people who look for alternate may look for Samsung, Oppo, Vivo, or all those brands available in the Android market, right? So you need to understand how sensitive the consumer are. And next thing is ability to substitute. So for example, in car segment, if you are selling Hyundai, right, then the alternative could be Maruti, the alternative could be Tata, the alternative could be Mahindra, right? The alternative could be Ford, right? So what are the substitutes available in the market and how your product are different from those substitutes? right? Last one is the cost of changing. That means if consumer is earlier buying your product, now it is switching to some other, what will be the cost? Oh, sorry. If the consumer is using some other product and wants to switch to your, so what will be the additional cost the consumer need to bear, right? For example, a real estate project, right? If someone has a real estate property at one place, but he or she wants to switch that property to another real estate, so it's not that easy. There's a lot of transaction cost involved in it, right? Those things you need to understand in detail. Those things you need to analyze in detail for making your overall business strategy. So why we are studying these 5 forces of analysis? So that you can make a detailed business strategy for your business, right? Third one is threat of substitute, substitute performance, and the cost of change, like we were discussing. Fourth is bargain power of supplier, right? For example, if you are in petroleum product, you are requiring crude oil, right? For example, you are in the production of polyethylene, polypropylene, or maybe jelly, or maybe Vaseline, or maybe such kind of coal, or maybe any such petroleum product, right? Then you are being dependent on the petroleum price in the international market, isn't it?
Right, sir.
Yes, no, right? Same way, for example, if you are a car manufacturing company, the steel plays the major role, right? If there is a change in the steel supply, or if there is change in the steel pricing, then it may have significant impact into your overall operation, right? For example, like I was auditing a company, Goodyear. They are into tire manufacturing company, right? The key product for the tire is natural rubber and synthetic rubber, in addition to like wires and a lot of other chemicals and stuff will go, but you can say like 60% to 65% is the natural rubber and synthetic rubber, right? If the supplier stops supplying the natural rubber or synthetic rubber, how it may impact to their business, right? So for example, like any of you have purchased car in last 1 year or 2 year by any chance?
Yes, sir.
Right? So when you went to the purchase the car, you might have heard there's a chip issue at the back end from which is coming from Taiwan. Have you
Correct.
heard this? Right?
Yes.
So that was because of the COVID situation, and before that there was a flood in the Taiwan, which has like AVG chips, which is mandatory to fix in all the vehicles now by the government itself. Right? Without that chip, the vehicle cannot go to the market, right? It's being mandatory requirement from the government itself, right? So those chips were in shortage because of earlier there was flood in Taiwan, and then after this COVID situation has happened. But now from last year in 2022, the India has started making the chip. So government of India has incentivized a lot of companies in India to start developing the chip, and they have done the tie-up with many Taiwan-based company to set up their company here in India to cater the need of the chip in India, right? So if those supplies being stopped, then delivery of all the vehicles got stopped, right? So the supplier power also, as a businessman, as an entrepreneur, you need to understand the supplier power. Second is number of supplier you have in market. For example, if you are in very niche product and if there is only one local supplier, other than that, all are international supplier. In that case of scenario, the cost will significantly change if that local supplier stop or his business stop for any reason, right? So those risks you need to identify and evaluate. Second is the size of supplier. Third is uniqueness of the services. Fourth is ability to the substitute, right? Instead of steel, what are the product you can use? Plastic, fabric, right? and then cost of changing, switching from one raw material to another raw material. Those things you need to analyze, right? Last one is threat of new entry, right? So for example, like there may be possibility, like let's assume two type of industry. One is service industry. Let's assume edtech industry, right? In edtech industry, if you see when the Baiju have started back in 2008, after that Vedantu have come up, Simply Learn have come up, many other like player, Class Plus and many other players have come up, right? So there was no significant entry barrier to open an edtech company, right? Anyone who have camera can start recording, and anyone who have basic understanding of the IT infrastructure can be setting up their own edtech companies, right? On the other hand, if you see the automobile company, car manufacturing company, if someone has to set up a car manufacturing company, it is a capital intensive industry, isn't it? It required huge amount of capital to invest,
Right.
right? So you need to understand what is the time and cost of the entry. Second is the entry barrier in the respective market in which you are. Second is specialist knowledge. Like I said, when this Patanjali, they have started with this Dant Kranti, right? Even though they have knowledge of the product, but they had 60% of the workforce from the Colgate, right? That's a
Mm.
specialized knowledge,
Right.
right? Same way, we are also like many of our sales team is being from joining from competition, right? That's needed. If you see in the big four also, the people keep rotating within the big four only,
Right.
because they understand the techniques, they understand the terminology, they understand the clients, they understand the business, right? And for them from day zero, it's being in use, right? If you hire like fresher for 6 months, you need to teach them, and after that you need to see whether you want to continue with him or her, or he wish to continue with you or not, right? And then again like salary and negotiation and everything, right? Specialized knowledge is also very important for you to understand. Next is economic of scale. So if you are producing in less quantity, how much it is costing you, but if you produce in bulk, how much is the economic of scale you will achieve. Cost advantage, technology protection, like nowadays, people are very well aware of the IPs, right? And they go for patenting. So all the technologies, nowadays, like people are being very well aware of applying those technologies for the copywriting, patenting, trademarking, right? And last one is the entry barrier. How you can create entry barrier for any new people to come into the respective market. So that always you need to keep in mind what all entry barriers you can create to the competition to avoid the competition, right? So these kind of analysis is being very much required for the business, and it's not only a one-time analysis, it has to be a recurring analysis, right? Because the dynamics of the market keep on changing every moment. So as a management, you need to keep an eye on all these analysis time and time again and again, so that you will not miss out on anything. For example, if you remember, like earlier back in 2000 to 2010, I would say Nokia was the market leader in mobile industry, right? From 2010 to till date, if you see, they have almost lost all their market share, right? When you guys might be kids, you might be seeing like most of the families are using Bata, right? But nowadays, like the taste preference is being changing to various new brands, right? For the sleepers. So, because if the company do not upgrade themselves, technologically or as per the taste and preferences of the consumer, it may gonna be obsolete, right? So any doubt on 5 force analysis, why we need to do this analysis? So far so good?
Yes, sir. So, sir, what is what?
Huh?
Nothing.
Okay, so let's do few questions. What does Porter's 5 force analysis access? Market size, competitive in intensity within the industry, economic growth rate, consumer preferences. What does Porter 5 force analysis assess?
Competitive intensity. Take second.
Just take a look what all things we have studied.
Competitive intensity.
Competitive intensity.
Within the industry, right?
Yes, sir.
So competitor rivalry or intensity, right? That's right answer. Second is in Porter 5 force, the threat of substitute product or services is influenced by what? Buyer power, supplier power, availability of alternative, or competitive rivalry. Threat to substitute product or services are influenced by what?
Availability of alternative.
Right?
Competitive rivalry. Competitive rivalry नहीं होगा मुझे तो वो लगा.
No, if you see like threat to substitute, right? So that's availability of alternative.
Okay.
Right? Okay. So next topic is financial modeling. So financial modeling, what do you understand by financial modeling? Any idea, any thought you guys have? Have you heard this term before? Financial modeling, by any chance?
सर सुना है बट इन मतलब डिटेल नॉलेज नहीं है इसके बारे में.
Any rough idea, any rough thought?
सर financial modeling to basically it's what I know is it is related to companies' finances. So which can be like budgeting and forecasting, actuals, analyzing all those using I think computer techniques and computer data models and all that.
Yeah, so like when company need to take decision, so they use financial modeling technique, right? Whether to go for any acquisition or should not go for any acquisition, whether to go for a merger or not to go for a merger, whether to open a new branch or not to open a new branch, whether to open a new segment or not to open a new segment, right? So for that, generally company do financial modeling. So in a very simple layman language, you can say cost benefit analysis, right? If you are taking such a decision, what will be the cost involved in it and what will be the return on investment, right? For that, they will be doing certain, you can say, they will be taking certain assumptions, right? And they'll be using some historical data. They will be analyzing certain data. They'll be understanding the market trend, industry trend, and they'll see like forecast. And then they will do budgeting, forecasting based on the respective assumption that if we are gonna acquire this, what will be the new profit and loss account, what will be the new balance sheet, right? Will it be a profitable to go for this particular acquisition, go for this particular merger, go for this particular investment, go for this subsidiary, go for any joint venture, right? So such kind of bigger decision, which is a strategic decision, for that company do financial modeling, right? So generally it is used computer-based model, like nowadays all the numbers and munching and crunching around the number do happen with the computer-based financial modeling technique that simulate and simplified version of the real-world financial situation, forecasting the performance of the business sector or product line. So based upon revenue or cost relationship, input can be changed to test the assumption, and projected results are immediately available. For example, like, have you heard about sensitivity analysis for any reason? Have you heard what is sensitivity? Any idea?
No, sir.
What is sensitivity analysis? Have you like any of you done the audit of provisions or accounting for provisions?
Yes, sir.
Right? Maybe leave encashment provision, employee benefit provision, warranty provision. Have you guys done any such provision?
Yes, sir. Yes.
Right? So in that, there are a lot of assumptions you might be taking. Right? For example, if you are taking long-term employee benefit provision, so there are many assumptions, which is like financial assumption and non-financial assumption. So financial assumption may be inflation rate, change in interest rate, right? Or non-financial assumption could be, you can say, the remaining life of the employee, right? Remaining working period of the employee, current life of the employee, mortality rate, right? Or you can say uh, uh, cost index, cost price index. Those all things are being different assumption that company do use when they create the provision for long-term employee benefit, right? So if for any reason there may be change in the inflation rate expected, so 1% change in the inflation rate, increase or decrease, how it will be impacting your overall provision for employee benefit. That is called sensitivity analysis. If company is estimating 10% increment in the payroll cost year over year, if instead of 10% they are considering 12% or they are considering 8%, what will be the impact on the provision for employee benefit? That is called sensitivity analysis. Make sense?
Yes, sir.
So the B point says input can be changed to test the assumption, and projected result are immediately available. That means if you are changing the input, instead of interest rate of 10%, you have taken 8%. If you just enter that 8%, the system will automatically reflect what will be the change in the provision, right? Instead of 10%, if you are considering 12% as interest rate, so system will automatically calculate what will be the impact on the provision. Same way, like you might have seen EMI calculator. Have you guys seen that?
Yes, sir.
Right? So in the EMI calculator, if you change the percentage of interest rate, it will automatically change the EMI value. Right?
Correct. Right.
So same thing what they are saying, right? Some model offer only a conclusion and other offer alternative course of action. So there are different type of financial model which offer different kind of suggestions to the management. So but basic purpose of financial modeling is the valuation, forecasting, support in decision making, budgeting and planning. So when you do the valuation, for example, like nowadays startup, you all have seen like Shark Tank, right? So they come up with certain valuation, but how do they derive and reach to the valuation of their organization for which they do fundraising? By the financial modeling technique, right? Determining the value of the business overall investment using the financial modeling technique. Same way, financial forecasting. So predicting the future financial performance is also comes under the financial modeling technique. Decision making, whether to buy or to take on lease, whether to go for acquisition or not to go for acquisition, whether to open a subsidiary or not to open a subsidiary, right? So all those kind of decision making is being done based on the financial modeling of the respective decision and understanding the cost, benefit, and return on investment. Next is budgeting and planning. It creates budget and plan for the financial projection that can be a good directive for the management to work upon. Right? So these are the purpose of financial modeling. What are the component of financial model? So when you develop the financial model, what all things you keep in mind? First and very much important thing is historical data, right? So your past year performance or the historical data which you have. For example, if you have to create a provision for warranty, right? So for that, you may be needing how much sales you have made for the respective category of product and what is the warranty policy you have and what is the industry warranty claims or what is the past year's claims based on the actual sales. So those all historical data is being very important. Second thing is assumption. Like yesterday I have shown you like financial modeling or budgeting or forecasting, right? So in that you have seen like very first step was all the assumption. Same way assumptions are being very much critical and very much important, and one has to wisely evaluate all the assumption taken. If one assumption goes wrong, it may result into completely different, it may impact completely to the, it may lead to the completely different result, right? Next is income statement, which is your projected revenue, cost, profit for specific period. Balance sheet, again, like which we have seen yesterday only, provide a snapshot of the assets, liability, equity statement. Cash flow will help you forecasting all the cash flow from operating activity, investing activity, and financing activity. And then the financial model, you can do the scenario analysis. Like I was communicating earlier, whether we should buy that machinery or take on lease, whether we should go for acquisition or should consider as a job working, right? So various scenario analysis you can do by using the financial model. Last one is sensitivity analysis, which we have discussed. Access the modeling sensitive to change in the key variable. If there is change in one variable, how it will be impacting the overall result, right? So these are the component which you need to use when you are making financial models, right? Any doubt? So far so good?
Yes.
Okay. Steps in financial modeling. First is understanding the business. So grasp the industry understanding, business model, key driver of the business, gather the data from the management, collect the historical data, relevant data, build the assumption, make it realistic assumption and about the future condition. Then after construct the model, develop the model structure using the formula and calculation, right? Same way how we have seen yesterday, right? Then validate and test each model about the accuracy and the reliability of the information. Then you do scenario and sensitivity analysis, change in the certain percentage of the assumption, how it will impact the overall result, right? Then after interpretation of the result, and the last one is documentation of the model. So this is one by one, step 1 to 8 when you are preparing the financial model. And there are many tool used, which can be like Excel tool, which we have seen yesterday, right? There are many financial modeling software also, programming language also being available to help you automate and customize the financial modeling. And generally used financial model include three statement financial model, balance sheet, income statement, cash flow, discounted cash flow model, merger model, consolidation model, or budget model, right? Financial model are used to estimate the valuation of business or to compare the business with their peers in the industry. They are also used to the strategic planning to test the various scenario and calculate the cost of new projects, decided on budgets and allocate the corporate resources, right? So this is all about financial modeling. So what all things we have understood in financial modeling? One, what is financial modeling? Second is the purpose of financial modeling, which is valuation, forecasting, decision making, budgeting, and reporting. Then component of financial modeling, what all things you need to keep in mind when you are making financial model: historical data, assumption, income statement, balance sheet, cash flow, scenario analysis, and sensitivity analysis. Then step by step, how you will prepare the financial model: understanding the business, gathering the data, building the assumption, constructing the model, validating and testing, scenario and sensitivity analysis, then interpretation of the result, and the last one is documentation, right? And the tools available for the financial modeling and generally used financial model include three: statement financial model, balance sheet, income statement, and cash flow; discounted cash flow, merger model, consolidation model, and budgeting model, right? So let's do a question over here. Any doubt on financial model?
No, sir.
Okay, let's do a practice question. Which among us the four financial model can be used to assess as to how many years it will take before the accumulated cash flow from an investment exceed the initial investment without taking time value of money into account, right? When you use time value of money,
So discounted.
discounted, that's net present value,
Yes.
right? So it is saying without using. So first option is incorrect,
Right.
right? Second is payback period. Third is IRR, internal rate of return, and fourth is discounted payback. So fourth option is also incorrect.
Right. Right.
Hmm?
Sir, right.
So which option is correct? What is the call of the question? Which among the four financial model can be used to assess how many years it will take before the accumulated cash flow from an initial investment exceed the initial investment? Payback period or internal rate of return?
Payback period.
Payback period, yes, because internal rate of return also use present value method,
Value. Correct. Right.
right? So second option is correct, right? Manish, Pranshi, Surya.
Yes, sir.
Shall we take a, I think, let's take a break over here. Maybe we can continue in the next class. People are feeling drowsy. Or shall we continue?
कितना बचा sir?
There are three topics, I think, maybe required one class. So we are done till fifth point, financial modeling. So,
Right.
so these three topics maybe we can cover in next class.
Okay, sir.
Okay. Okay. So I'll send you, I'll update these two things which is yellow marked over here and send you the notes in some time.
Okay, sir. Done.
Right? Please go through the notes and do your practice. If you have any question, please take up in the class, because after the class it will be very difficult for you. Right? I request you guys, please do the practice simultaneously. I know like most of you are not doing the practice, to be very honest, because I can sense in the class like you guys are not doing practice. If you are doing practice, you may have definitely few questions for me. Right? I request each one of you to do simultaneously some level of practice. I'm not saying do 100%, but at least do some question and revise the notes at least, right?
Right, sir. Okay.